Yo YouTube, what's happening? It's your boy Kobus, the realist OG. I think I'm recording this video for like the third time now. People keep on disturbing me, but let's dive into what I have for you today, guys. So today I'm just actually going to share about how I approach the day. Okay, so first you gotta have a daily bias. Okay, you gotta know where the daily candle is likely to expand to before you can uh, have a framework. Actually, that's part of like formulating a framework for your intraday setup. Okay, I'm an intraday trader, so I trade the sessions within the daily candle. So the daily candle is divided into number of sessions, which we're just going to go up into now. So usually we know that a daily candle forms by what we consolidate, we manipulate, and then we distribute. It's the open, and then we form a wick of the candle, and then we form the body, and then we also form the other wick of the candle. For example, in a bearish scenario, okay, in a bearish scenario, we're gonna have an open price. We're gonna have an open of the candle, and then we form the high of the day, and then we form the body, which is part of the distribution part, and then the small reversal before the daily candle closes. It's what forms the low of the week in the bearish scenario, and vice versa in the bullish scenario. In the bullish scenario, we open, we trade lower, which is the manipulation leg, and then the distribution, creating the body, and then the small reversal before the candle closes. So these are specifically uh, my ranges of the sessions. Okay, people, they're actually slightly different to what others normally use, like what ICT uses and stuff, but I use this because they work for me. Okay, I actually got this plug from Zeus. He's the one who shares this type of session ranges, and I actually saw that they are working. So agent session starts from 6 o'clock in the afternoon until 2:30 in the morning of the next day, and then after that, after Asian session, we have London session, which starts from 2:30 in the morning to 7 o'clock in the morning. Oh, sorry about that. And then we have New York morning session, which starts from 7 o'clock to 11:30 in the morning. And then lastly we have New York afternoon session, which starts from half past 11 to 4 o'clock. I made a mistake there by writing 4:30. Okay, so with the New York PM session from 12 to 1 o'clock, it's New York lunch. So the first 90-minute cycle of the New York PM session, we are going to take it as New York lunch. So we don't trade that session. We wait for the next 90-minute cycle to open, which is around 1:30. Okay, so it starts at 1:30. So from 1:30 to from 1:30, no, from 1 o'clock. From 1 o'clock to 2:30, that's the second 90-minute cycle. That's where you can actually look for setups. So keep that in mind that New York PM session, the first 90-minute cycle, it's lunch. So I don't actually consider that. Okay, so this is my buying framework. Okay, so let's dissect it. When the daily candle opens, we want to see it open and then manipulate lower into a higher time frame key level. Okay. And then after that we want to see it giving us signatures that it's now ready to to distribute higher. Okay, so in terms of session, usually what you see, it's Asian session would consolidate, and then you see that London session is the one which manipulates lower into the higher time frame key level. If not, you'll see that New York AM session is the one which enters the higher time frame key level, and then we start to distribute higher. We have a market sign signatures that we are now ready to buy. Is we'll have buy signatures. We will see market structure shift, and there are specific things which you are looking for on the market structure shift. I'll get deeper into that, but I just want to explain what is happening here. Usually Asian session will engineer liquidity, and then London session, you will see it going lower, leaving the liquidity usually intact, or maybe just taps it small but goes down. This is going down into the higher time frame key level, so already that's a hint that okay, why are we leaving clean liquidity levels or clean buy side liquidity levels? It's something which we should take into consideration. The market or the algorithm will actually give us signs that okay, we are going to buy later by leaving clean levels up while it goes down, while it manipulates down into a high time frame key level, which can be a fair value gap, it can be a BC, okay, or another block. You just have to have a point of interest. Okay, what actually guides us which point high time frame key level is the correct one? It's time. We want to see what we are looking at: time first and then price. So what actually happens is, based on the time and signature, if you see this signature happening after we entered, let's say there are two fair value gaps, and then the market maybe enters the fair value gap, the first one, which is, if there are two, it means one is above and one is below. Let's say the market now enters the one which is above, and then it provides us with this scenario or the market structure shift. Then we know that that one is the, it may be the right high time frame key level. For example, I used to want, sometimes I would want the market to actually maybe come to discount of the previous day, and then the market does just that, it just doesn't deliver according to how I anticipate, until I came to this concept of time, that we look at time, certain things will happen during certain times. Okay, so how I look at the market is, I want to see liquidity being engineered during Asian session, as I've shown here. I don't have a mouse, I'm recording with a tablet here, but the line, the blue line here, which is written buy side liquidity, I want to see the market engineer buy side liquidity, and then I want to see it on a buy day when I'm looking for buy setup, and I want to see the market going down, okay, into a higher time frame key level, and then I want to see some sort of sell side liquidity sweep while maybe entering a key level, and then just after sell side liquidity sweep, and then we get market structure shift with certain conditions which I'm about to go into. So for the for the conditions which I'm looking at when we're shifting structure, first I want to see My first thing which I look at is time. Are we in the right trading session? For example, if this thing occurs during Asian session, I'm not going to uh, I'm not going to partake in the move because I don't trade Asian session. I trade most of the time it's New York, okay, or London. So I'm looking at time. Is the time agreeing with what I'm looking for? Okay, and then after that, most of the time I want to see liquidity sweep and some sort of like SMT divergence. SMT divergence is when you're looking at closely correlated pairs. Let's say one sweeps liquidity and another one fails to sweep liquidity. For me, I take that as also a sign that okay, there's likely to be reversal around that area. So when the market structure is shifting, maybe from sell to buy. So in this case, you see that London session was going down, okay, and then now we see that uh, New York session it's giving us signs of no longer going down but going up. So when we are shifting structure, I want to see the candle which displaces higher, or the candle which sweeps, which breaks structure. I want to see big candles. I want to see speed, and momentum, and then I also want to see the market disrespecting bearish arrays and then starting to respect bullish arrays. What do I mean by that? If you can check in this London session, we have been forming lower lows and lower highs, but when market go to New York, we started to form higher lows and higher highs. So we are disrespecting bearish arrays and now we are respecting bullish arrays. Okay, so this is what I actually look for on a buy day. This is my sell framework. Okay, same stuff. I want to see Asian session consolidating, and then I take this consolidation as engineering of liquidity. Okay, not in a bad way, but there are some people who when they are looking at this, they think that this is a strong resistance. Is it resist? No, it's a strong support, and then they think that level is protected. Me, when I look at it, I'm like, okay, this level is too clean. The algorithm does not like leaving clean levels like that. I want to see liquidity being engineered maybe during London or Asian session. Okay, and then I want to see the market trade higher into a higher time frame key level, which can also be a favorable gap or bearish order block. And then I want to see the market reacting off from that higher time frame key level. I want to see the market moving away from that higher time frame key level with speed and momentum. I want to see the market displacing in the opposite direction, leaving gaps. I love seeing gaps whenever there is a market structure shift. So I want to see the market reacting off from a high time frame key level with speed and momentum, leaving gaps, breaking structure, and then during the right time. Okay, so this is my sell signature checklist. First, time. Are those things happening during the right time now? Okay, if the time is right, it's a tick to that one. And then, is there market structure shift after entering a higher time frame key level? Do you have speed and momentum? Okay, or was that just a liquidity sweep? Because sometimes liquidity sweep and market structure shifts are not the same. Okay, so I want to see the market reacting off from a higher time frame key level with speed and momentum while breaking structure. I want to see formation of fair value gaps. I want to see bullish arrays being disrespected, and then I also want to see bearish arrays now being respected during the right time. Okay, so I will actually okay, we have come to the end of the lecture. This is just the overview of how I approach the market. Okay, I will post a video about this happening on the real market. Okay, which I'll record shortly. But right now I just wanted to give you how I actually look at the market. Okay, let me just give you a summary of what I just said. First, you have to have a daily bias. Okay, in this case here we're talking about bullish, so in this case we will be anticipating higher prices. We want to see liquidity being engineered. Usually market will leave two clean levels. It will leave relative equal highs, and then it starts to go down into a certain level, maybe sweeping a liquidity on a higher time frame, usually on an hourly chart or 4 hour, while entering a key level, and then now we see a reaction off from that high time frame key level, and then we look for places where we can place ourselves in the market. So this is on a buy day. First, you have to have a sort of like a daily bias. Okay, tomorrow I think the market is going up. Okay, we're not saying it's gonna go up, we are anticipating that it will go up. If your bias matches, if you see this scenario which matches your bias, then you are likely to be right. Okay, and then in this case, if your bias is bearish and then you see this type of scenario happening, then you are likely to be right. I'm not saying you're going to be right, but you are likely to be right. It's a high probability trade. Okay, and then you must be careful of the time. You will see a lot of things happening outside of the time windows. Those setups most of the time are likely to be low probability setups. I've witnessed that myself. The market will just gyrate up and down, playing with your feelings. You think it's so you will see that the market moves during certain times. Most of the time it's London and New York. Most of the time it's actually New York. Market moves, the big moves happen during New York. So yeah, you just have to first you have to have a daily bias, and then maybe you have a 1 hour or 4 hour structure. Maybe let's say on an hourly chart you see a fair value gap, or on a 4 hour chart you see a fair value gap or an order block. You see the market trade into that 1 hour or 4 hour fair value gap, and then during the right time windows, and now you see the market reacting off from those levels. That's a confirmation that now we are likely to move during the right time windows. So guys, that's what I actually had for you guys today. I hope this was actually helpful, because I realized that I just post videos of what I say, or this is the setup I called blah blah blah, but some of you can actually be confused, bro. What am I actually talking about? Like, so this is the framework which I use, guys. This is what I use on a daily basis. Okay, so I'm signing out. Peace and love. If you're new to this channel, man, hit the subscribe button if you found this helpful. It's peace and love. I'm out. Tango.